the Financial Survival Network. Now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, today is 1/19/22, and well, it looks like the market believes the Fed. Even if the Fed doesn't believe itself, the great taper is upon us, and the market is having its predictable effects. Well, here to discuss and explain to you exactly what's going on is our good friend Michael Pento. You find him at pentoport, PORT.com. Michael, hey, Happy New Year first and foremost to you and yours. And well, I don't know if this will be a happier year, but perhaps it'll be more interesting.
Yeah, hard to believe it can be more interesting than what we had in the previous few years, but God bless you and your show and your family and your health with a great 22. You're going to need a lot of blessings. We are all going to be needing of blessings in 22. And I wouldn't turn on CNBS for any guidance. I'll turn on to your channel instead.
Yeah, well, you know, I'm trying to cut out all the negativity in my life.
Oh, good luck with that.
People, toxic websites, toxic YouTube channels. I'm getting rid of them all and just trying to stay focused, positive, and keep on my purpose. There's really not much more you can do, just like what you're doing here, Michael.
I believe in providence, and everybody's got a role to play in this world. And maybe my role is to try to save as many people as possible from the buy and hold 60-40 BS that you hear. That worked really good in the 60s, but in the modern era of purely fiat currency, where money is just a keystroke on a computer, gratis of the Federal Reserve et al., it's no longer the case. You have a massive and unprecedented bubble, a triumvirate of bubbles in real estate, and of course, fixed income and equities. I just as anecdotally speaking, I'm in here and speaking to you from Naples, Florida. And it's just insanity here. You could just throw up any price you want on your home and someone's going to buy it for cash in 5 minutes. And that's because, we have had negative real interest rates pretty much forever. The vast majority of the time in the modern era. And then you add on to that, the Fed's buying billions and billions of dollars in mortgage-backed securities. And you wonder why, people have a lot of paper wealth. The paper wealth, if you look at your stock portfolio added to your real estate portfolio and you say, wow, I'm a rich guy. Everybody's a millionaire now, it seems, And then you say, okay, well, let me just I'll sell some of my NFT profits and I'll buy a house in Naples. It's insanity, but reality is coming in 22. So get ready.
So you brought up kleptocurrencies, and I have a small crypto holding. Not anything wonderful. Haven't made a lot of money on it. Probably a little negative right now after the action that's happened. But what's going to happen? Is cryptocurrency inflation a result of the money bubble that's been taking place here, Michael? The debt bubble?
You had to ruin the interview by bringing up cryptocurrency.
You brought it up.
I could spend an hours telling you why they're basically zero utility, almost worthless, and they're all going to go pretty much to zero. But listen, it's an emblematic of the fact that Tina is the rule of the day. There is no alternative. So Wall Street makes stuff up. They say, hey, let's just create a currency, and then we'll say it's decentralized because that's what gives it its worth. It's decentralized, supposedly, right?
DeFi.
Decentralized currency, yet we're going to centralize it because Wall Street has to sell it to us. So it have to be subject to know your customer and the anti-money laundering rules. And then it's not really decentralized. It's very much centralized. Everybody knows who you are. They absolutely can take it from you at any moment. And then we blow it up to 60 something thousand dollars a unit in the case of Bitcoin. And then it crashes, it's down, what is it?
Yeah, to low 40 now.
40% from its high. And since the actual cost to mine one of these things is in the low single thousands of dollars, well, that's, if you want to call it intrinsic value, then that's basically the most it's worth. Because you can't really, it doesn't have the throughput to be an actual currency. It's too volatile to be money, that's for sure. So it's going to probably fall down to that intrinsic value of a couple of $1,000s a unit sometime soon. And, I was wrong most of the way up. I've been right a lot of times too. This thing is just too volatile for me and my clients to touch.
All right. So we're talking about cryptocurrencies. Well, the cryptocurrency of Wall Street, the equivalent is Tesla. Is that thing going to just be decimated, the stock, or because, Tesla is really a product, well, forget the subsidies. They're kind of gone now, but it's a product of easy money, of free money. Once the money is no longer free, so people can't buy their cars or lease them for virtually nothing or no interest, isn't that the end of them?
Well, I got to tell you an anecdotal story here. Once again, another anecdote. Are you ready? So I have a client who really just, I think, was aggravated at just not making, 30% a year. And he wanted to go all in on Tesla. And within 2 weeks of making that decision, he's down 20%. Stock dropped 20%.
Timing is everything.
I just listen, if you're a customer of Pento Portfolio Strategies, we have an inflation, deflation, and economic cycle model. We tend to do very well most years. We sometimes underperform the S&P 500 in bull markets, and then we sometimes tend to outperform the S&P anytime we have a bear market. And I think the mother of all bear markets is right in front of us. So if I consider what I do like an all-weather portfolio, trying to make money no matter what happens, and you're going to have an actively managed strategy to get you through what's coming in 2022. Because, listen, I'm not a perma bull, I'm not a perma bear. I don't always overload the portfolio with gold. I'm not always net short the portfolio. I wouldn't have had positive returns for the past 6 years if that wasn't the case. If I was just permanently bearish. But this year, I will tell you that the Federal Reserve of the United States of America has no choice. And by the way, I'm not saying this because I'm not pimping gold, so I could actually say this without any reservations. For a time, the Federal Reserve has no choice but to combat inflation. So you think about since 1981, the Federal Reserve, from 1981 to 2020, the Federal Reserve has not had to combat inflation. The problem has been, according to the Federal Reserve, we need more inflation. In fact, they slapped on a 2% target and said, hey, we can't function as a society without 2% inflation, without destroying the currency by 2% every year. They've done a pretty good job now of finally getting to 2%, but then they didn't really, and I've said this, I think I even might probably said it on your shows. Kerry, the Fed has really a very horrific track record with inflation. They either generate a whole hell of a lot of it, or they can't generate enough of it. The only thing they really can generate is a lot of asset bubbles. But they finally got their 2% inflation and then 3.5 times that. So they have 7% inflation. They have no choice but to NQ. Now they have 7% inflation, Kerry, and they're still printing $60 billion in January, adding to the balance sheet, which is now almost $9 trillion. But they have to dramatically and quickly NQE. Then they have to start ratcheting up interest rates, and then they have to start to drain the balance sheet. All of that's going to happen in 2022. Now, where I will agree with some people who are Austrian economists and who also don't believe the Fed can do much in the way of tightening, is that that is a truncated period of time. In other words, they have to aggressively fight inflation. They will do so for maybe a couple of quarters. And then I believe the whole artificial edifice comes crashing down because there's just too much debt, too much leverage, too much margin in the system. It's such an artificial edifice that it has to implode as soon as they start to really aggressively fight inflation. And that's what I'm protecting against right now in my portfolio.
This reminds me of an episode of South Park, talk about life imitating South Park, where everybody's credit card gets cut off, and the hero in the episode, he gets an American Express Platinum card with no limit, so he's able to like reflate the economy single-handedly by basically letting everybody bootstrap onto his credit card. And I guess the days of South Park economics are coming to a close, aren't they?
Well, did that person with the unlimited credit card, was his name Jerome Powell?
I think he went by the name of Stanley, but that could be a AKA of Powell's.
Yeah. Well, you know, the funny thing is, I wanted to mention that, you know, Wall Street, because of all of the money printing, just to put some numbers on that, the Federal Reserve's balance sheet was $800 billion at the start of the Great Recession, circa 2008. It's now almost, as I mentioned, $9 trillion. That's an increase of $8.2 trillion in a very relatively short period of time of base money supply, which is the building blocks of all other debt-based currency. So when you think about that kind of destruction, you have no, you know, you don't have to wonder why we have cryptocurrencies and NFTs, and now we have this metaverse BS, which is like, you know, Wall Street I just hate Wall Street. I just have to tell you, I have a visceral and, you know, hatred of Wall Street. They come up with this stuff. What the hell is the metaverse? I have to like educate myself constantly on this stuff. Instead of buying dividend stocks at a fair price, I have to now worry about what's the metaverse. Is this just like art? Is this like this fake world that we, you know, artificial digital world that we live in? They're selling real estate on the metaverse, and that's going through the roof because I actually heard somebody on, I think it was on CNBS, but I'm not sure. Some lady was on TV saying, you know, the amount of real estate in this metaverse virtual world is limited. So therefore, it has so much value. I'm like, oh my God, help me. Kerry, help me. Will you please help me?
It's only limited by their imagination.
It's only limited. It doesn't really exist, but it's limited supply. So how much do you want to pay, Kerry? How much
I haven't figured that out yet, but I could, you know what? They're selling, Michael, on the Metaverse, and this you're going to like, the Metaverse version of the Brooklyn Bridge. You know, and you can set up a toll booth.
That's hysterical. Oh, thank you. You know, they say, you know, if you believe that, I'll sell you the Brooklyn Bridge. Well, we're going to we're going to actually sell you the Brooklyn Bridge virtually. How much is that going for, Kerry?
A goodly amount, you know, but the problem is they want real money for fake stuff, right?
Well, they want fake money for fake stuff. That's why this stuff exists. I mean, if money was real, if you think about what money really is, I mean, it used to be barter. Like I would actually produce a good or a service and I would exchange it. And I said, well, you know, that's not really a good way to exchange things. Let me go mine, produce, you know, dig an ounce of gold or silver from the ground with all that energy that's involved in that. And that will be money because it actually is limited in supply. And in case of gold, it's, you know, virtually indestructible. Let's use that as money. And then they said, well, listen, we have a technology. We can live in a fantasy world, Kerry. Let's just make money not real and be able to create it electronically. And that's what we've done. And that's why this whole thing's going to come crashing down in 22 because they finally jumped the shark with inflation. We have inflation running at 7%, the way they measure it. And the way you really should measure it by, if you look shadow stats, we're running at 14, 15% pre-Boskin commission. It's the highest rate of inflation this country has ever seen. Ever seen. You're destroying the middle and lower classes. People can't afford to buy first-time homes. And the Powell Fed has no freaking choice. It isn't an option. It's politically untenable for them to have an inflation rate that is 7%. So they're going to have to destroy the stock market in the process of getting to a real, by the way, if you want to have a real Fed funds rate, Kerry, you're going to have to go from 0 to 7. I mean, they're not going to get anywhere near there, but they want to get to 2.5 to 3. Let me remind you what happened the last time the Federal Reserve went to 2.5%. It was right before the market crashed 30%. The Russell 2000 lost 30% in about 2 or 3 week time frame. The last time they got to 2.5%. It was the end of 2019. Okay, so there's no way, there isn't a chance that they're going to get anywhere near that now because of all the additional leverage, margin, and the total market cap to GDP now is still 200%. So the market cap of equities is twice the underlying value of the economy. It's never before happened. The highest it ever got before this was in the great NASDAQ bubble of the year 2000. It was 1.44% of the underlying economy. So we have the highest, most overvalued stock market in history, and that margin is the greatest in history between this time and the time before.
Yeah. Well, they never learn from their past mistakes at the Fed because they never admit they made any in the first place, just like 1929, And so is this going to be the greatest buying opportunity in our lives once the market crashes down 80%, if you're to believe a lot of forecasters?
Well, if the market was just to go back where it was before the pandemic hit, it's got to go down 40%. That would be a fairer value, but still very overvalued. 40%, 30 to, I'm sorry, I misspoke. It's 30%. 30% just to get back to where it was pre-pandemic. But it never just stops at 30%. I mean, I'm looking at 30 to 50% because I picked that decline not arbitrarily. I look at fair value of the S&P 500. But I also think after the market drops 30 to 50%, you will trigger a credit event. In other words, I think the market for junk bonds freezes, the repo market freezes. I know there's a standing repo facility right now, but once they tap that facility, all hell's going to break loose in the credit markets. Commercial paper will freeze. Like I said, the repo market freezes, junk bond market freezes. And then the Fed is going to have to come in and do something. And the big problem I see, the salient issue there is, well, wait a second. You are now telling the investing public that you can never, ever drain your balance sheet. You can never raise interest rates very much at all. You can't defend your currency and you cannot defend the value of the sovereign debt market. That's a pretty strong message that they're going to put out, but they're going to put that message out to save the stock market and asset prices. But will they really save it, Kerry? Mm-hmm. They're not going to really be able to save it because the stock market isn't going to really like intractable inflation and what that does to the fixed income market. Remember, if the market crashes in 22, like I think it will, and in many cases, by the way, it already has.
Started.
I think 40% of the NASDAQ. I looked at this data earlier. 40% of the NASDAQ is down 50% or more. And if you look at Kathy Wood's ARK, I think their whole portfolio is down 50%. The whole thing is down and is cut in half. So the market is already crashing parts of it. It's just that you have, Apple and Google, they haven't really, crapped out yet. Microsoft has a little bit, but that's coming. And then after that freezes the credit markets, the Fed has to come in, but they're going to be coming in at an inflation rate that's probably still 5 or 6%. So if you're going to tell me that the balance sheet of the United States has to grow by trillions of dollars from 9 trillion, and if you're going to tell me that the Federal Reserve can never really get to a real Fed funds rate, they're going to be negative real Fed funds rate by 5, 6%. You can never really fight inflation ever. Never drain the balance sheet. Never raise interest rates. Well, what is the message you're going to give to the fixed income market? Where are those yields going to really go? What does that do to the currency? So intractable inflation isn't a recipe for a robust economy. It's the recipe for the most salient, painful battle with stagflation we have ever seen before.
Well, so if what you're saying is true, Michael, then I think the Plunge protection team, the members there are going to be having to send out their resumes shortly.
Well, the Fed, first of all, the Fed put isn't dead, but I've said it's way below where Wall Street thinks it is. I mean, I still hear people say, well, once the Fed sees the market down 5%, they're going to come to the rescue. No, as I can't stress this enough. I'll say it again. You no longer have that luxury because inflation is 3.5 times their target. It just can't happen. Not with oil going, WTI is up to $85 a barrel.
WTI is WTF, right?
Yeah. I mean, you're going to fill up, if you start filling up your tank with $4 or $5 a gallon, you're not going to make a lot of people happy at the poll. And you have a choice. Do you destroy the economy through inflation, or do you destroy the economy through melting down asset prices? You have a choice. Do you want to protect the 1%? You want to check us 1%ers, or do you want to protect the middle class? Well, to me, if I make that calculation, there's a lot more people in the middle class than there are 1%ers. Yeah. So you're going to have a problem with the Federal Reserve of the United States until you absolutely destroy the credit markets. And then they're going to have to do something. And I think again, it's going to be stagflation that we've never before seen. And that, by the way, my friend, is when I want to really load up on gold, because it's not the leading up to that liquidity crisis, and it certainly isn't during the liquidity crisis. It's the response to the liquidity crisis. In other words, the Fed says we are now going to be faced with buying trillions of dollars of helicopter money, because I think everybody in DC is then going to become a Keynesian again. Like they've shown many. I don't care who's in the White House, and I don't care who runs the Senate.
Doesn't matter.
Everybody's going to be saying, okay, we need to have universal basic income. If you make less than $100,000 a year, you're going to get, whatever they come up with. And the Fed is going to monetize all of that.
And
so
we're going to get
about stagflation.
And we're going to get wage and price controls too.
I have no doubt. That worked really good under President Nixon. So why not try it again?
It was one of his star accomplishments, wage and price. The only way you can pull that off somewhat is during a war. And even then, I remember my father was in the home heating oil business, his father, my grandfather, and he had all these ration stamps, and my father wanted him to sell them on the black market, which he wouldn't do because he was too honorable. And at the end of the war, he still had that $10,000 worth of ration stamps that could have been sold for $100,000. It doesn't work no matter what. But now, especially today, it's definitely not going to work. So,
well, you've seen empty shells because of COVID, because of the Wuhan virus. You want to see empty shells on steroids? Try to impose wage and price controls on producers who won't produce stuff that they sell at a loss. I can guarantee you that. So you'll see empty shelves really, and then you start getting civil unrest. That's what I'm worried about. Wage and price controls don't work because people aren't going to work and produce goods and services and sell them at a loss. Hello?
Just a funny aside here. I had an analyst on who said we're going to see $1,900 gold in all likelihood by the end of January. and I've gotten flames on YouTube from it. And Nat, this is the same BS everybody always says. And I said, well, this guy's got a pretty good track record. He didn't say it was going to stay there, intermediate high, till I guess the actual crisis really kicks in. But Michael, we're going to see like tons and tons of loans destroyed, and that's going to be super deflationary. So it's going to drive the dollar higher. I think with other countries like China starting to inflate, you'll see a huge amount of flight capital from China, because everything, it's our economy on steroids. Everything about China is built on free money, cheap money, and rug sweeping. So when everybody fails, just sweep it under the rug and write checks. Kind of like our Federal Reserve. Where do you think they learned it from, Michael?
Well, you just said two things. That's why I love coming on your show, Kerry. You said two things that are out of the mainstream. So you said that it's going to be deflationary. Liquidity crises are always deflationary. That shows that you're very smart. And you also aren't a perma bull on China. China is not the people of China. I love the people. I love Chinese people. It's the horrific government of China, which is so deplorable. And they have done everything that we have done on steroids. And you think about their, 70% of their economy is their housing bubble. They're going to fix that by, people can't afford a house anymore in China.
Sounds like New York.
Yeah, Hong Kong, home price to income ratios are through the roof. So now they're going to fix this bubble by inflating the bubble bigger. I mean, it's just incomprehensible. So they'll destroy the currency, and all these dollar-based loans that are around the world are going to come due, and then they're going to be like, hey, how do we pay back $1 with our currency collapsing? So it'll be defaults across the globe. So I'm just trying to get this point across, that 2022 is going to be a disaster for people who aren't actively managing their portfolio, and for people who, and I get chirped sometimes on the media and on social media. Let me tell you something. For those of us they say, well, you've been calling for a crash. First of all, I always said a couple of things. Number one, I want to make clear, I am not a Cassandra. I have said since 2009, by the way, as another parenthetically aside, I called for the crash in 2008, back in 2006. I then said go long the market in 2009. I also said that the way the government was dealing with this crisis would always lead to more and more asset bubble implosions. So most of that duration between 2009 and 2020, I was long the stock market. I've been both long and short. The stock market collapsed in 2008. Stock market collapsed in 2018. The stock market collapsed in 2020. So there has been episodes of market collapses, without a doubt. But here's the thing: you have to be aware of the buy and hold 60-40 portfolio is no longer working, because both are in a massive bubble. As a matter of fact, the long duration assets, treasury bonds lost 9% of their value last week alone. Can you imagine losing 6-7% in the NASDAQ? If you're heavily, if you own NASDAQ stocks and long duration bonds, you've been wiped out so far this year. And the carnage hasn't even begun, because the Fed is still printing, adding to its balance sheet. Come March, that all goes away. And then you're dealing with quantitative tightening, and then you're dealing with interest rate hikes. So if you think January was rough, wait until you get until the second quarter of this year.
Hey, you know what we say here? It's not that the cure is worse than the disease. The cure is the disease. And that's really the problem, right?
Well said, as usual, Kerry.
Yeah, I mean, hey, seeing this, like, they're spending money like there's no tomorrow, and at the rate they're going, there won't be a tomorrow. And then the wake-up call at every level of the entitlement society. Everybody's entitled to their piece of the Washington, D.C. piñata. and they keep hitting it and hitting it, and one of these days it's just going to burst open, and then what happens?
Well, the last couple of years have been, you said Alice in Wonderland on steroids. I couldn't agree more. When you handed $50,000 in the last 2 years, on average, to every American family. I mean, I didn't get it, you didn't get it, but almost, the vast majority of American families received $50,000, and most of it was printed by the Federal Reserve.
Yeah,
and that's what drove home prices and asset prices through the roof. That's all gone. 2022 is going to be the year of a fiscal and monetary cliff like we have never seen before, ever. Happening at the same time and concurrently with an economy on a global basis that's already slowing. So, I mean, please, I have a 20-point model. I'm trying to save as many people. Unlike Kathy Woods has an ARK portfolio. I have an ARK portfolio too. It's called the Noah's Ark portfolio. Get on board Noah's Ark. I didn't make that up. Like a client.
Yeah, but I was thinking that myself.
Get on board the Ark.
Yeah, before it's too late. Well, Michael, you've been consistent, more consistent than even former presidents. I think there was a moment a couple of months ago that set this whole thing off without getting political, and that was the discovery that the emperor has no cortex.
Listen, you're talking to someone who's a libertarian.
Same here.
I always say, who says a pox on both their houses all the time? Well, I kind of agree with that. I don't like either party.
Shakespeare,
I don't like either party, but I have to tell you that the person in charge now, really, I don't even think she's in charge.
Whatever in charge means. It was Shakespeare's Romeo and Juliet, spoken by Mercutio, a plague on both your houses. And now it's become a pox.
Yeah.
Was, I don't know how it evolved to that. Hey, I found the quote. That's all that matters. Don't catch me quoting Shakespeare, although I do love language and wordsmithing. And of course, Shakespeare had few equals then and now and since. But when it comes to crash proofing your portfolio, Pento Portfolio Strategies has few equals as well. I would urge you all to go to pentoport.com, call them up. The number is 732-772-9500, and start thinking about what will happen when the piñata called Washington, D.C. has gotten its last slam with a aluminum baseball bat, and all of those goodies go splattering all over, and then there's nothing else, because that day's coming. If you got a question for Michael, you can also send me an email to kl@kerrylutz.com, and don't forget to sign up for your free newsletter at financialsurvivalnetwork.com. Michael, always a pleasure. Thank you so much.
You are an erudite individual with a wonderful lexicon. How's that?
The Financial Survival Network. Now more than ever.